Hi, this is Walker Williams, Chief Market Strategist from Lido Advisors, and you're watching Taking Stock.
A steep sell-off here into the close as the major market indexes are expected to finish the tail of the tape right about at session lows. It's not necessarily what market participants had in mind when they started the day here on Friday, because earlier this morning the markets were in positive territory. That was, of course, until 10:57 a.m. here on the East Coast. That's when President Donald Trump took to social media threatening additional retaliatory tariffs over China, at issue, at dispute, rare earth mineral exports, and thrown into question whether or not the president would be meeting with President Xi Jinping in the coming weeks. Once again, renewing these fears market participants had going all the way back to the middle of April. That tariff and trade policy uncertainty will rule the day. And once again, we are reminded of that trade policy uncertainty. It all sets the stage for today's show. And welcome to the broadcast, one and all. This is Taking Stock. I'm your host, JD Durkin. Moments away from the ringing of the iconic closing bell here at the New York Stock Exchange. We've been doing it for hundreds of years. Let's continue with it on this Friday. We are expected to see the tail of the tape down 2.7% for the S&P 500 in negative territory. Every 2% or so sell-off is about $1 trillion in total value that essentially disappears from the publicly traded market. So we'll see what investors have in store. But for now, Credit Corp, ticker symbol BAP, here into the close, set to do the honors on this Friday. A little bit more broadly here on the price action on this big day of selling for the major market indexes. We did see the VIX spike up north of 21, reaching its highest level since June 23rd. Rather, looks like a bit of downward pressure on the 10-year Treasury yield. Oil markets in retreat. Gold up on this very much risk-off trade here on Friday. Let's bring in my good pal, Katy Perry. She is the co-host of Daily Rip Live at StockTwits. My friend, welcome to the show.
Hello, congratulations.
Thank you.
Big win.
A big win for the New York Giants last night.
Welcome to the winner's circle. I'm a Bills fan.
It feels very nice. Not winning attitude, however, for investors in the markets today. You and I are down here. We don't frequently look up and see negative 2.71% for the S&P 500. What did you see in terms of market reaction to the president's post today, Katie?
Yeah, we've been waiting for this a little bit. All week on the show, guests coming in and out saying something feels a little off. We had the tweet this morning. It was a lengthy one. I don't know if you saw it.
Big one.
I think hostile we used multiple times. Maybe he's been listening to some of those spicy Taylor Swift singles that are out. But, you know, market's obviously reacting to that. But investors are, I think, overall in StockTwits, they've been waiting for this opportunity. My co-host talking all week about how he's got cash ready to deploy. We're looking at, you know, is it going to go in the Mag 7 or not so much and go back into some of these AI value chain trades?
Yeah, all 7 of the Mag 7 stocks were down in negative territory. We saw leading the losses were NVIDIA and Amazon. What do you think this does, if anything, to Fed calculus? Do we get the sense FOMC officials, do they pay that close attention to market sell-offs like this? We do have another decision coming up in 3 weeks.
Yeah, it's coming in the 28th or 29th, I believe. Michael Barr was making comments this week, seemingly of potentially indicating maybe a pause could happen. I don't know, we'll see. I think with investors, there's just a lot of things to juggle at the same time. You got the government shutdown, you got the fears of an AI bubble, you got the sell-off today. There's a lot of things to kind of hold in the brain at once, and they're trying to make sense of it all.
What are you seeing with viewers and listeners of your show at StockTwits with regards to the AI bubble debate? I'm sure you got a lot of retail investors. They're eager to learn more, and I'm sure you got lots of thoughts as well.
Yeah, I mean, it's interesting. We have people coming on the show that have been watching tech for years, and they'll say this is very different than what we saw in the 90s with the internet stocks. AI is so entangled within every facet of every business. Then you had the Bank of England this week coming out and urging caution. There was also a pretty opinionated column in the Financial Times saying, is America's economy solely tied to the AI economy now, and what does that mean? So there's a little bit of concern around sort of the circular nature of all the companies co-investing with each other. But the people I talk to that are studying this day to day say this is completely different, and this is here to stay.
Yeah, I talked about at the start of the show here, Katie, the fact that we had the 10-year Treasury yield fall and retreat down only 8 basis points. We're underscoring long-term alongside of the yield curve, mortgage rates easing. What have you heard in that conversation? A lot of people want to know when they can expect those long-term borrowing costs to continue to come down.
A lot of eyeballs from retail investors on the housing market because of the popularity of Open Door and Better.com, and so they're kind of waiting to see how the macro impacts those stocks that are really popular among retail investors. The 30-year fix, though, hit 6.3%, which is the lowest it's been in almost a year, so that could ease some of what we see going on there, but look out for those stocks if that continues.
How about equities holding into the high? I mean, up until this week, we did have all-time high after all-time high. A little bit of modest profit taking, I'd argue, in yesterday's session, but nothing like what we were expecting into today.
Yeah, I mean, we were saying all week, we were waiting for the other shoe to drop. It's been up, up, up. We've been talking since August. September, is something going to happen? October, I think people were kind of expecting it, but one of my guests remarked that there could be an overreaction just because it has been so good for so long and so many months that any sort of dip like the one we saw today could have an overreaction just because recency bias that we haven't had it.
Yeah, of course. Before I let you go, I'm about out of time. Anything else big on your radar you would want our viewers to pay a little bit more attention to in the broader world of the markets?
Yeah, I think the big thing the last, I'd say 3-4 weeks is this intersection between traditional finance, decentralized finance. I was at Zero Hash's on-chain summit yesterday, and they had the head of trading from Morgan Stanley basically saying, you know, crypto's sort of vanilla now for these big institutions. They're on to the next, tokenization, stablecoins. That's happening so fast. So just continue to watch those two worlds come together has been fascinating.
The great Katie Perry of Stock Twist, thank you for being here and
Thank
kicking
you,
off the show. It's great to have you. Josh's going to take your mic. Howie, you and I are going to head this way, and we are going to take a walk. Oh, it's kind of open today. Jeremy, by the way, producer extraordinaire, welcome back to the show. It's nice to have you back. All right, let's talk about some Polymarket odds here. To the question on the event contract for Polymarket, will President Donald Trump meet with Xi Jinping by October 31st. Earlier this morning when we woke up, the odds were, in the eyes of Polymarket participants, overwhelmingly yes, at 88% after the president's post on social media. Those odds falling 50 percentage points all the way down to 38%. They were expected to meet at APEC in South Korea at the end of the month. We will wait and see how that geopolitical story plays itself out. Howie, we're going to take a look here at shares of technology. XLK, wow, did they get throttled on the day, down 4%. A lot of the highly weighted names in this ETF, no big surprise, they've got high revenue exposure to China. 44% of this entire ETF is NVIDIA, Microsoft, Broadcom, and Apple alone. That ETF still up 20% on the day, but having a tough day in response to that post from President Donald Trump. Howie, let's move along and let's look at a defensive play on the day because not all of the names of the household branch for the stock market are down today. You got a rotation to some defensive names like a Philip Morris, like a Coca-Cola, and in this case, McDonald's up 1%. It's only up 2% or so year to date, but watch defensive names like McDonald's with potential volatility as we head into next week with uncertain questions with regards to U.S.-China relations. All right, folks, earlier today, New York Stock Exchange's very own Kristen Scholler sat down for an exclusive interview with Dr. Patrick Soon-Shiong, all about how the LA Times is building what he calls the media company of the future. Take a look.
The Los Angeles Times Media Group is taking a step to go public. And joining me now with more is the chairman and CEO of the Los Angeles Times Media Group, Dr. Patrick Soon-Shiong. Doctor, thank you so much for joining. Congratulations on this news.
Thank you for having me. It's so exciting to be on the floor of the New York Stock Exchange. And we announced it yesterday, and this is our path to going public.
A path to going public here at the Stock Exchange is quite impressive. Patrick, what is the Los Angeles Times Media Group going to look like?
So this is an opportunity to go from the ink to digital. And this is the really evolution of a 144-year-old paper. So when you think about what we are truly a newspaper with integrity, investigative reporting, 144 years of IP, frankly. When you integrate that with the Los Angeles Times studio, things like we're doing right now, where you have discussions, podcasting, events, streaming live, that's a Los Angeles Times studio. But we've gone further. We now have a thing called the NAND studio, which is the most sophisticated LED volume, where both ads, movies, events, all the way to esports and virtual sports, and making that available to the audience. There's 3.2 billion viewers that watch esports competitions, gaming, and then going from the crosswords and with the NAND games to an interactive games. When you put all of that together under one roof of a content management system called Graphene, which you've taken 7 years to build, and now you evolve from ink to digital, there will still be, and there should be, our audience who want to have the touch and feel of paper. We'll continue to print that, but if you want the digital feel of paper, we have a thing called the e-newspaper that you can actually touch and feel and look as if it's a paper and go directly to the story. So that's what this Los Angeles Times Media Group is, and I'm so pleased that our partnership with New York Stock Exchange and us being on the floor of the New York Stock Exchange, in which real live feed from the financial world, which is really important in the stock trading world, will be streamed from here. So it's fun for me to be here on the first day in which we announced the fact that we have an opportunity to go public, and we will go public, and it'll be on the New York Stock Exchange under the ticker symbol LAT.
Well, Patrick, congratulations again, and thank you for outlining what the Los Angeles Times Media Group looks like in this new digital age going forward. You mentioned live feeds and how important those are, especially as people do consume more on the go, on their mobile devices, and digitally in general. What more can you share about the window to the world that those sorts of feeds offer?
Well, I think you raised the correct question. Is the world is now mobile. I've not had a physical computer for years and years, literally for 6 or 7 years. I do everything on my phone. But the opportunity to bring the global world together, and maybe we should discuss one of the future opportunities in terms of tokenization. So this whole area of blockchain, digital securities, digital asset transfer, stablecoin, Bitcoin, may sound foreign to a lot of people. I believe that's the future of asset transfers. So imagine the day would be arrive when, in fact, the day may be soon, where anybody in the world could get 1,000th of a piece of stock of Berkshire Hathaway, but couldn't afford it, but do it through a tokens. So I believe that tokenization is the future of security stock exchange, bond stock exchange, tied to blockchain, so that there's no fraudulent transactions and very safe. That'll happen on your mobile device. And this is the future where we will bring, through the Los Angeles Times Media Group, together partnerships with stock exchanges like the New York Stock Exchange, modernize even securities exchange.
Congratulations and welcome to the Stock Exchange, Dr. Patrick Soon-Shiong, Chairman and CEO of the Los Angeles Times Media Group.
Thank you for having me. Look forward to being a partner with you and this being our future home.
Likewise, thank you.
Okay, thanks.
Welcome back to Taking Stock, still live down here on the trading floor of the one and only New York Stock Exchange. Time now for the latest in the worlds of fintech, crypto, and AI-related headlines you need for this Trading Friday. First up, all the crypto majors shedding $125 billion combined on the president's China tariff threats earlier this morning. Next up, Reflection AI raising the bar and raising $2 billion to build America's open source alternative to China's DeepSeek in a direct challenge to closed lab giants like OpenAI as well as Anthropic. And finally, Bank of America, Goldman Sachs, and other global banks are jointly exploring a reserve-backed digital currency, a potential industry-wide stablecoin for G7 markets. That's the latest you need to know in fintech, crypto, and AI. And let's bring in our next guest. Gianfranco Ferrari is the CEO of Credit Corp, and I always love getting to interview who just did the closing bell here at the New York Stock Exchange, and Gianfranco and his colleagues did. Welcome to the NYSE and welcome to the show.
Thank you, JD, and thank you for the invitation and hosting us today.
So let's start first and foremost with what actually brings you and the team from Credit Corp down here onto the New York Stock Exchange to ring the closing bell, and what was the experience like for you?
Sure. Well, we're celebrating our 30th anniversary. We listed here 30 years ago, and we've been growing over the last 30 years steadily as part of the Peruvian economy. So quite happy and excited to be here. And the experience was great.
Can you talk to us about some of the highlights of 3 decades of a publicly traded company? I mean, that is the dream come true for so many entrepreneurs out there.
Yeah. And when we started, there were a relative small company. Today, our market cap is close to 20 billion. But more important than that, we started basically in Peru. Today, we have operations in 6 countries in Latin America, and very focused and committed to promote financial inclusion and education in the countries where we operate.
What would you say most excites you about some of those other emerging markets? I love getting analyst notes and talking with people who don't just have the focus here on the U.S., but they point to crucial countries around the world and say there are remarkable public market opportunities elsewhere as well.
Sure. The issue for us is that in the economies where we operate, the banking penetration and financial penetration in general is quite low. A lot of informality and so on. So we sort of cracked the code, especially in Peru. We launched a digital wallet 7 years ago. Today is the most relevant digital wallet in the country. About 80% of the adult population uses it on a daily basis, and that's one of the main reasons why the stock has gone up dramatically this year.
Yeah, and you and I were talking before we came back from commercial break that your stock is up 40% from the beginning of the year off where the first publicly traded market day was January 2nd, 40%. What has led to that success so far here in 2025?
Well, obviously results, but more importantly, the excitement us as management, but more importantly, our shareholders have around what we're achieving in financial inclusion.
What would you say are among the company's top priorities, not just for the remainder of Q4, but give us some guidance for what to expect for 2026?
Yeah, our commitment is to keep improving and increasing the financial inclusion in Peru, also leverage on financial education. We've brought 6 million Peruvians for the first time in their lives into the formal financial system. That's huge for a country of 30 million people. So that's the goal, not only for the next year, but for the upcoming years. We really want to keep bringing people into the financial system and they leveraging and getting the benefits of being part of the formal financial system.
I am very grateful for you taking the time to join us, not just here on the trading floor of the New York Stock Exchange, but for being on Taking Stock. Congratulations. 30 years of success as a company, a killer so far year-to-date performance. Gianfranco Ferrari is the CEO at Credit Corp. Gianfranco, thank you so much.
Thank you, JD, and happy to be here and hope to be in 5 years again.
Of course, we'll do it again soon, my man. Thank you so much for taking the time. Folks, don't go anywhere. Coming up, the latest on startups, raises, and rounds, plus an interview with Josh Levine of Orange BTC. More Taking Stock coming up after this. Let's do it. Welcome back to Taking Stock. Today in the world of startups, raises, and rounds. First up, we're bringing news out of the team from Kalshi, raising $300 million at a $5 billion valuation, all part of a prediction market funding boom that, of course, also recently saw Polymarket land a cool $2 billion investment from the New York Stock Exchange's parent, ICE. Next up, Stoke Space raising $510 million to scale manufacturing of its fully reusable Nova launch vehicle. It's a major step towards high-frequency U.S.-built access to orbit. And finally at this hour, Data Curve raising $15 million to crowdsource elite AI training data through a bounty system. The effort takes aim at scale AI's stronghold on the industry. Josh Levine joins the show now here on the trading floor of the New York Stock Exchange. He is the chairman of Orange BTC. Welcome to the NYSE and welcome to the show. It's great to have you here.
Thank you so much, JD. It's great to meet you.
I know you've said before the stars are aligning for Bitcoin.
That's
We
right.
talked a lot about the recent all-time highs, eclipsing 125 in recent days.
Yes.
What are you seeing in the broader Bitcoin price action space?
Well, what we're seeing is a lot of acceptance of Bitcoin for a lot of reasons, but I think most importantly what the US markets are waking up to is this concept of monetary debasement. It's a headline trade nowadays in the market, but it's a market, or at least a concept, that's been embraced globally out of necessity. At Orange BTC, we're based out of Brazil. You know, if you wind back the clock in 2011, the Brazilian real was 1.5 to the dollar. Today it's 5.3. The capital markets volatility along the way has been considerable. And so investors outside the U.S. have had to think about this. This is something that we think U.S. investors are going to have to think about going forward.
I feel as if a lot of retail investors, they were pretty quick early on to really at least experiment, get to know
Yes.
as more informed investors the underlying crypto space. Institutional names took a while to get there. What do you see in terms of ongoing institutional adoption and really just a willingness to engage with the crypto majors?
Yeah, it's a great point. I'm actually really enjoying it. If you think about the history of capital markets, let's say the development of derivatives in the 80s, it was the opposite, right? The institutions have always had the upper hand. And this is a case where you've seen innovators, you've seen entrepreneurs who really grasped what this was all about, the value of the community, and now they're being rewarded as you see the institutional investor come into space. So I'm really enjoying this dynamic, and I think we're in the early innings of that trade.
What do you mean when you say Bitcoin is better at being gold than gold?
Well, try to transfer a kilo of gold to a transaction in Tokyo. Try to transfer a piece of gold. Try to divide a piece of gold. Let's suppose I want to actually pay you for something. Am I going to take my little gold bar and walk up and just kind of chisel a little piece to you? No, it's awkward. And so Bitcoin, it's scarce, it's digital, you can send it anywhere in the world, it's costless, anybody can do it, so there's a lot of attributes about Bitcoin that we think are very useful for everyday investors.
Are you surprised with the way that Bitcoin price action has driven it relative to gold all-time highs, and then the reaction for a day like today when equities are down? I don't look up and see minus 2.5% very often.
Yeah, no, it's a great question. Gold and Bitcoin react to different things in the market, but ultimately in the long term, kind of the same. So if you take a day like today, you look at the screens, everything is red. It's a risk-off day. It's a fearful day. And when that happens, you see risk premium really kind of come in and you see gold rallying, right? Now, long term, there's many different types of inflation in the world. The one that we're most concerned about is this monetary debasement. And when you have that, there's room for both gold to rally and Bitcoin to rally. Long term, we think it's going to be a huge tool. Not so much for people to make money on, but for people to really not get poor on.
I'm almost out of time. Real quick, if you can, base case for performance of Bitcoin Q4 or set up for next year?
Wow, if you're going to ask me to put a very specific number on it, that's always a difficult thing to do, but we're quite bullish. You see the predictions, Larry Fink at 700,000, you see others at 1 million, you see Michael Saylor at 13 million. I'm not going to give you a specific number. I wish I had that crystal ball, but suffice it to say, we're bullish.
Bullish is good enough for the response we're looking for. You're welcome back onto the show anytime. Josh Levine is the chairman of Orange BTC. Thanks for making the case. Thanks for being on the show.
Thank you, JD.
It's great to have you. Enjoy your weekend. Folks, don't go anywhere. After a quick break, the latest from Money 2020's Chief Strategy Officer, Scarlett Sieber. Much more taking stock from the New York Stock Exchange coming up after this.
Welcome back. I'm Scarlett Sieber from Money 2020, and we are going to be doing the briggity breakdown of how fintech companies make money. Today we have a special one for you, maybe a little bit of a twist. Spotify. You're probably thinking, Spotify, that's a fintech? First, as you know from our segment on this exact subject, everything is fintech, people. But you might not think of Spotify as that, because you're going to think of it as a music app. And here's the twist. Spotify is actually one of the biggest fintech companies in the world. Why? Because it doesn't just stream songs, it runs one of the largest micropayment networks on the planet. A micropayment is exactly what it sounds like. Small payments going to creators for their cut of the advertising revenue, etc. Every single play of a track triggers a tiny payment, a fraction of a cent. Multiply that by billions of streams across 180 countries, dozens of currencies, millions of artists, and you get Taylor Swift's net worth. Okay, I'm kidding, but real-time clearing and settlement at global scale is something special. Banks dream about this kind of system. Here's the real kicker. Spotify made it possible for not just megastars, the future Mrs. Kelsey or the future Mr. Swift, however you think that's going to turn out, but tiny indie artists with a few thousand fans to get paid for the downloads and those views. That is fintech, democratizing access to money flow delivered as fast as computerly possible with full bank level compliance for their payment products. Try to say that 3 times fast. But how are they actually making this money they're passing on to the creators? These are the moments I feel like I'm woman-splaining to you at times, but it's exactly what you're going to guess, okay? In fact, I'll give you 10 seconds in that chat to take your guess at the biggest revenue driver. And 10 seconds is here. If you guess subscriptions, you would not only be right, you'd be right to the tune of 600 million users paying a monthly fee that depends on which plan you pick, of course. But no matter what the plan is, Spotify is coming out ahead and singing along to the tracks while they do it. What's the second largest generator of revenue? Let's test that logic again. If you have 600 million subscribers and not all of them are paying, then that means that there is a free tier, right? What comes with the free tier? We all know it. Of course, advertising. Spotify sells audio, video, and display ads. It's smaller than subscriptions, but it is still worth billions. This one Swedish upstart turned music into a cash flow business. Before streaming, artists had to wait for CD sales or royalty checks. Now, even if you're a DJ in Berlin with 5,000 listeners, Spotify ensures you see that money. Spotify changed the world of music, sure, but they democratized payments to creators. That's the stuff that actually changes the world. Folks, there is no doubt about that. They definitely did that. Back over to you.
Let's do it, folks. Welcome back to the broadcast. With the remaining moment or so, get you quickly caught up on everything you need to know happening here on Wall Street next week. No shortage of Fed speakers. That kicks off Monday afternoon. CPI inflation print had been scheduled for Wednesday, but we heard from the government today. We can expect that print on the 24th of October. And then, of course, once again, earnings palooza here on Wall Street. We hear from the big banks, JP Morgan, Goldman, and Citi on Tuesday. Dollar Tree and United Airlines set to report quarterly results on Wednesday. And on Thursday, we get Taiwan Semi, Monday morning, 9 a.m., NYSE TV Live and FinTech TV Live. Count you down to the open. That's going to do it. Have a great weekend. We will see you Monday.